Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Power Integrations Inc. quarterly report. Power Integrations, Inc. offers a diverse range of products and services that cater to various industries. The company's primary offerings include analog and mixed-signal integrated circuits, ICS, for high-voltage power conversion, alternating current to direct current power conversion products for consumer appliances and industrial applications, power conversion solutions for LED lightings, solar and wind power systems, electric locomotives, and high-voltage DC transmission systems, in no-switch IC for electric vehicles, high-voltage gate driver products under the SCALE, and SCALE M-2 product family names motor driver ICs for refrigerator compressors, ceiling fans, air purifiers, and circulation, pumps and fans used in appliances such as dishwashers, laundry machines, and boilers. The company serves markets including communications, computer, consumer, and industrial. Its products are sold to original equipment manufacturers and merchant power supply manufacturers through direct sales staff, independent sales representatives, and distributors across various regions worldwide. The stock price decline of Power Integrations Inc. Power Integrations Inc. POWI, has experienced a substantial 39.48% drop in its stock price over the past year due to a combination of factors. The company's weak financial guidance, GAAP net loss, and broader macroeconomic headwinds affecting the semiconductor industry have all contributed to this decline. A key event was Power Integrations' Q4 2025 outlook and Q3 2025 GAAP net loss announcement on November 5, 2025. This revealed a GAAP net loss of $1.4 million and weak revenue guidance for the fourth quarter of 2025, which fueled investor concerns. Additionally, the company's CFO departure in October 2025 added uncertainty for investors, while broader semiconductor industry concerns led to a downturn in November 2025. The downward revision of future expectations over the 3 months leading up to November 2025 further exacerbated the decline. These factors collectively contributed to Power Integrations Inc.'s significant stock price drop, highlighting the challenges faced by the company and the broader semiconductor industry. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by net sales, which increased from $109,876 in 2024 to $123,456 in 2025. Additionally, the company experienced significant growth in sales across various regions, with the Americas region increasing by 12%, EMEA by 34%, and APAC by 43%. Direct sales to OEMs and power supply manufacturers also contributed to revenue growth. On the other hand, revenue decline is primarily driven by potential negative impacts from litigation costs and fluctuations in customer demand due to unpredictable market conditions. Changes in trade policies, tariffs, and export controls may also have a negative impact on revenue. Net income and profit margins decline in 2025. The financial performance of a company has taken a hit in 2025, with net income and profit margins experiencing significant declines. Net income plummeted by -119% compared to the previous year, from $14,291 in Q3 2024 to $1,356 in Q3 2025. Year-to-date YTD, net income also decreased, from $23,094 in YTD 2024 to $8,803 in YTD 2025. Profit margins have also suffered, with gross profit margin remaining unchanged at 54.6% in Q3 2025, but decreasing to 55% YTD 2025 compared to the previous year's 56.1%. Operating income margin has taken a more drastic hit, dropping from 10% in Q3 2024 to -3.3% in Q3 2025, and from 45.2% in YTD 2024 to 0.4% in YTD 2025. The decline in net income and profit margins can be attributed to several factors, including a significant increase in stock-based compensation expense due to modifications of outstanding equity awards, increased expenses across various categories, and potential pressure on selling prices from customers seeking to offset the impact of tariffs on their own products. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. In 2025, the net cash provided by operating activities increased to $85,312, up from $66,455 in 2024. This increase suggests that the company is becoming more efficient in managing its day-to-day operations and generating positive operating cash flow. Management is optimistic about the company's outlook, citing several key strategies to drive growth. The primary focus areas include expanding into new markets and applications, developing technologies that enhance product value, and increasing energy efficiency through GaN technology. Additionally, management aims to reduce carbon emissions by promoting renewable energy products and expanding offerings in the system-on-a-chip market. To achieve these goals, the company will invest in growth initiatives, increase operating expenses, and manage production and inventory levels based on internal forecasts of customer demand. Management is confident that existing cash reserves and projected working capital will be sufficient to meet the company's needs for at least the next 12 months. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid dividends to its shareholders, as indicated on pages 6 and 31 of the report. Secondly, the company has also bought back shares from the market, with references to this activity found on pages 6, 17, and 32. That concludes the financial summary for Power Integrations Inc. Feel free to comment below, and I will be happy to answer them when possible.